Welcome again to the Rick Helps Real Estate Show. Once again, trying to make sense of this crazy Arizona market. Hey, have you signed up for my weekly newsletter yet? It's in the link below. Comes out every Monday morning at 7 o'clock. I just kind of go over some the same stuff that I talk about here on the show, but in maybe I don't want to say more detail, but it's worth signing up. So I won't spam you. Drew, hello from Israel. I'm still a loyal follower of your show from overseas. Holy cow. I'm a former client who was moved for Army reassignment. Keep up the good content. Hello, Drew. Good to see you. It's always fun to find out that people are watching from afar. So remember yesterday, and yesterday was just a few short hours ago. I said the headlines are going to start coming out about Case Shiller and January numbers. And lo and behold, they have. Before I get to that, in just a moment, here's where the mortgage rates are today. They're drifting slightly higher. So, in conclusion, down here, they say, but as panic subsides, investors have moved cash out of the bond market. This puts downward pressure on bond prices, upward pressure on yields and rates. This continues to be the primary source of input for rates, and one that is beginning to settle down. There's more room for rates to adjust higher if banking concerns continue to subside. In other words, if we get good news, that's bad news for rates. So that will mean that the central bank can probably continue to squeeze a little bit tighter. There's a survey that I alluded to below that you can see that there's a 41% chance that the central bank's going to go up another 0.25 in May when they come back. So it's just always fun to watch, isn't it? Here we go, though. Watch this. Phoenix home price growth hits brick wall in when? January. That's right. Here's your article right here saying, and they got a home. They always have home smart photos. That's because most of the media companies are around Central Phoenix, and Home Smart is very prominent down there. Home prices were flat in January over the previous month, according to CoreLogic Case Shiller U.S. National Price NSA Index. Yes, and we know why, right? Because sales in November and December, when those contracts were written, were very dismal. And so the closing prices in January were not stellar. But Case Shiller comes out, it's lagging data. So they're telling you what happened in January. It's almost April here, folks. So, and here's another comment here by Robert Shiller. Now, I followed him religiously in 2006, and he was spot on. I remember sitting in my house and I was looking at what was going on. Like, damn, this isn't right. There are not that many people moving to Phoenix. And these loan products are terrible. And he was saying, we're going to go down 43%. And he was right. We went down 48%. But now he's saying house prices are still very high. So hold off on buying as the U.S. economy will keep struggling. So he's advising, sit on your hands for a while. The economy is going to be a bit of a rough ride for the next 6 months. And he said, maybe if you have a good chance to delay your purchase, it might be a good time to do so, he told CNBC. Shiller added that he's expecting the U.S. economy's struggles to continue for the next 6 months. Now, anybody's guess how well that's going to affect pricing? He's the guy that looks at the data. U.S. house prices still look very high as potential buyers should consider delaying their purchases for another 6 months with the economy struggles likely to continue, he said. And he said it's easy to forecast the short run in the housing market, but if you're a long-term buyer, it's not clear. Very interesting article. He is basically saying, I think the economy is going to get really rough, so strap in. Could be right. Could that affect our real estate prices? Well, if we're looking now, and this is what really kind of what I talked about yesterday, down here, let's see if my red pen works today. It does. There's your January numbers that headline is talking about from the Phoenix Business Journal right there. There's January. Ever since then, we're going the other way. When are you going to hear about this uptick in prices? This is February, March, so June. in June, Case Shiller index is going to come out and say, hey, here's where we are. We're up. How about that? Surprise, surprise. So are we going to continue? I'm only comparing this to last year. This is the big run up right here in 2022. So I can go here and say, okay, well, what was 2019? Let's take a peek at that. We like to call that pre-pandemic, right? There's 2019 prices there, monthly average sales prices. Are we going to end up down here? Right now, I'd say it doesn't look likely. So we'll just hold on and watch and see what's going on there. Then we want to look at active listings. Again, I'm comparing this to 2019. As you see the headline saying, active listings in the Phoenix market are up 205%. The crash is coming. Look how we are in relationship to 2019. We're still below that level. We're nowhere near the level that we saw in 2008, which was 58,000 listings. And on top of the 58,000, I believe there were 30,000 foreclosures. So you're looking at about 88,000 homes. So no wonder you were driving by boarded up homes. Here's the Cromford Market Index that I kind of like to look at. And I like to focus on just this spot right here. See that? See, the red line is a demand index. And then the blue line is the supply index. And they're going the opposite way yet again. And when the gap was this huge, that's when prices went nuts. So when I look at this, it's pretty easy in the short term to say, without a doubt, that prices have no downward pressure right now. And Tyler's laughing here and saying the price increase almost steeper than February 22 for February and March. Yeah, let's take another look at that. So it really is. I mean, it's going up faster than it did here. January numbers explains a lot. Yeah, and now let me be clear here too as I'm putting out this information. I just talked to you about Robert Shiller and what he was saying, that where things are going could happen. Definitely a much smarter guy than me. So he's worth following. It's worth looking at everything you can if you're looking at real estate in the long term and you want to figure out when you can get in, if you can get in, where are the rates headed. And but I noticed that he's saying, yeah, it might be worth waiting 6 months if you're in a position to do that. He isn't saying things look bleak. He isn't saying that the wheels are going to fall off the wagon. His language is actually just kind of cautionary. He's not a crasher. He's just saying, if I could, I'd wait it out for a while and see what's going on. Because there's a lot of dark clouds in the economy right now. There's a lot of what ifs that are out there. There usually always is. But, he's saying, be careful. But then I look at our local data and I go, when I look at the numbers of what's actually going on now, I don't see it yet. I don't see any issues. If we do, it'll show up in this data, or is it data? Here we are on a Cromford Market Index, and the blue line is the balance, and we're above that. Not much, but we're above that. And this is a historical look at what things are going on. Take a look at that. The CMI was 26.5 when 2008 happened. Our CMI now, Cromford Market Index, is sitting at about 120, I believe it is. And here's the years of the buyer beatdown. You had CMI at 511. No wonder you couldn't get into a house. 468. You were out there pulling up to the house, and then a Greyhound bus pulled up with 50 other people to look at it, shoving you off to the side, telling you to get out of the way. Got out of the way. And here's the index again in perspective to other years. So looking at 2020, 2021. Now let's go back to 2020 or 2006. CMI was way down here. Now, 51.2. So remember, this is an index, and it's a forward-looking predictor of the market. In 2006, everybody was telling you to buy. Buy now. Did you see your neighbor? He bought a house. In fact, he bought two. He got in with this really cool interest rate. It's adjustable rate mortgage, but don't worry. Next year, you can refinance it, and you can sell it for $40,000 more than you paid for it. While all of this chatter was going on and all the FOMOs out there The Crawford Market Index is shouting at you saying, hey, time out. We're at 51. The future looks bleak for selling in the real estate world. And nobody was paying attention. Nobody was paying attention. When the CMI was headed up here in 2020, very few people were paying attention to what was actually going on. And Soy here says it looks pretty healthy relative to the other years on the chart. It actually does. Now, look at 2007. Let me get rid of these other numbers here for you. And this is kind of like how I like to drill down on this. So if I look at 2007, got worse. So they were shouting from the rooftop in 2006. 2007, they're going, not good. 2008, it actually was kind of hanging in there at about the same time. Now, go up to 2010 and 11 when people were telling you, do not buy a house. Buying real estate's the worst thing ever. The market was flat. 2011, it started going up. 2012, it was up even higher. 2013, it was flat. 2014, it went way down. 2015, but as I say, it went way down. We were above 100, which is considered anything over 110 is a seller's market. And here we are looking at numbers in 2010 and 11 when people are telling you not to buy. Crawford Market Index sitting about 160, 175. Let me get rid of some of those years again here and take a peek at 2018. Right about here was when the Fed came in and started raising rates. And so the market started to fall back a little bit, and they had to pivot, and they went back and put rates back where they were. 2019, I think we already had it on there. It was coming up. And in 2021, we were way up here, and then we started coming down. In 2022, you can see what happened. Boom. But right about here, people were not getting the message that the market was softening. Now, yesterday, I talked a little bit about if you're a seller and you put your home on the market, guess what news that your buyer is going to remember? This stuff? Nope. Case Shiller, because that's going to be on the news tonight. It's already in the Phoenix Business Journal. They're going to hear that sales are down. And they are. It's true. They're down in January, the average prices. Weekly sales are still down. We're still down as we look at what's going on in our market here. This is the number of contracts actually shot up from about 3,000 to 3,200. Slight little dip over the 7-day moving average, but then the inventory isn't keeping up with it. But the reason I tell you that the buyers are looking at the news, they're going to go, well, real estate's in bad shape. You're asking $450 for the house. I'm going to offer you $420. Somebody's going to swoop in behind them and offer them $450, and they're going to be out. And so it's just ask your neighbors, hey, how do you think the real estate market's doing? And I'll bet they'll tell you. I hear it's pretty bad. Did you see the Case Shiller index? All that data, January. Did you see how bad January was? So it's important to stay on top of the current numbers. And I find the whole thing not comical, but that's just the way it works. The media loves to get the headlines. Now, in June, is it going to say March numbers were exploding in real estate? Probably not. There might be a little article out there that says March was better than we thought. And right now, March and April look like they're lining up to be pretty good months. If some of the predictions, especially by Barry Habib, and I don't have an update on whether or not we can get him on yet, but as he's thinking in May, right around May 10th, he's expecting a big shift in downward pressure for mortgage rates just based on predicting the inflation data. Then if that happens, May could be pretty good, and so could June. So, but if you go back and look at some of the things that Case Shiller's talking about, Robert Shiller, he's saying there's a lot of things going on in our market, but he also said right here, he goes, he believes there's at least 6 months of declines left to come. 6 months of declines. We're going up. So we're going to have to shift dramatically based on his view that the key policymakers will eventually accept a recession that helps drag down prices. In other words, those that are calling the shots are going to say, well, I guess we're going to have to go ahead and let a recession happen in order to get inflation down. When there's economic downturn, unemployment's likely to go up. That reduces the number of Americans who can afford houses and stops landlords from raising rent. That is absolutely true. That's the capitalist system with the central bank. He said it looks pretty well, works pretty well most of the time, and I wouldn't tinker too much with it. Now, there's a lot of disconnect. A lot of people are going to disagree with him here on this statement. We have smart people on the Fed. And Treasury Secretary I admire, Janet Yellen, he added, they may have to accept something of a recession. You can agree with that or not agree with that. I think I'll just let those, what do they call that? Let the dog sleep or something like that. So I'm going to leave that one alone. They are smart people. Don't get me wrong. You can't be in charge of the central bank and be a dummy, but you can be in charge of the central bank and do dumb things. And I think they inflated us for far too long. And now we're trying to figure out how to get out from underneath that. So I wanted to just point that out today, that here come the headlines. And if you're looking at listing, just be aware of the buyer sentiment that's out there, but also be aware that there are some savvy buyers out there that know what's going on in this market, especially in Chandler and Gilbert. It's pretty brisk out there. So those that are going out thinking that they're going to get a bargain are kind of getting disappointed. And even if you think you can go out and get a good deal on an open door home, that party looks like it's over because they only have around 300 homes left to sell. It's kind of like the grocery stores are running out of toilet paper. So open door, they don't have a lot of downward pricing pressure right now. So if you go in and you offer them something and you really lowball it, they're going to say thank you, but we're still far apart. Now, we got lucky. We did well with an open door home. It took us 6 months, but my buyer's probably one of the most patient guys I'd ever seen. He had his eye on the house. He goes, we're going to wait him out. He says they will eventually come around to our price. And we went higher than where we were hoping we would land. But we actually got the appraisal back yesterday, and the appraisal came back, I think, 20,000 higher than what we went under contract with. Sean says, when do you think all this data will shake out for public knowledge? Hi, Jackie. We've been talking about you ever since we got on here, so you have to rewind it. When do I think it's going to shake out? June. May and June, we'll start talking about February and March numbers, Sean. So, but I don't think they're going to talk about it in the way that they talk about the January numbers, because it doesn't make headlines to say real estate's up 5%. That doesn't make the papers. Saying that it's down versus last year is a good headline. So I don't think there's going to be a heck of a lot out there. I think you're still going to find plenty of YouTubers saying crash, crash, crash. And I kind of have to laugh because there's a presentation put out by the Cromford people, and there's 3 slides on their PowerPoint presentation that are dedicated to how many crashers are out there. I'll see if I can show this to you. I can move this over. This is funny. So here's the first one. YouTube housing crash. This is one YouTuber. I don't know who it is, but terrifying. Investors panic. Meltdown line. Lost decade. Horrifying scenario. And then we get to our favorite guy. Bailout, depression, crash, mortgage collapse, 46% crash, 68% drop, fire sale, deflation. He'll still be there. He'll still be out there for a while. And then we got another one. It's all unraveling. The Big Short. Rate hell is coming. Lumber surplus. Everything's going bonkers. So, but I just thought this was pretty funny. All that's out there. It's all negative, negative, negative. And then she has a little funny thing here. It says, YouTubers crash already. Phoenix real estate prices up 5%. So there is a lot of misinformation out there. And then there's the Case Shiller stuff is not misinformation. It's accurate. It's just late to the party. So we'll watch that, keep track of that. There's more out there. Now, the Case Shiller index is what it is. It looks at stuff, but where they're also in conjunction with CoreLogic. CoreLogic makes predictions for the year. And the past 3 years, they have been way off. I mean, in 2022, they projected that we would be down. I think it was, no, 21. They projected we'd be down 13%. I'm just trying to pull that out of my hat here, but uh, that didn't happen, did it? So you kind of have to look at it with a grain of salt. So you look at what Redfin says, what Zillow says, what CoreLogic says. You will not see the Cromford Market Index tell you where we're going to be next year. They'll tell you probably where we're going to be next quarter, but they won't go out that far. Contractionary aggregate demand has shifted to the left. Interest rate hike, which has effect reduced GDP, not at the expense of unemployment, equals no recession. Those are complicated numbers, but you may be onto something there. GDP is definitely being affected, and we're seeing a lot of layoffs in the tech sector, but we're not seeing it anywhere else. And I know there's some pullback right now. Facebook's building that big building out in Mesa, and now it looks like they're going to sublease part of that out. So they're feeling some pressure. And how's that going to affect us? There's still a whole lot of stuff going on here, man. You get a chance, go down Price Road to the Intel plant in Chandler. I've never seen that many cranes in the air in my life, and it's amazing what they're building. And they're running new power supply lines underneath the street to the plant too. And I think they're also going to be running some more water lines because, they recycle the water they use for the chips. But I always marvel when I look at that and go, why do you need a building that big to build something this small? So, but they are going crazy, as is the Taiwanese chip plant in North Phoenix up on, I think so, what, Joe Max Road up there? A lot of cranes in the air up there. So we got a lot of stuff going on here, folks, and we'll just keep watching it. Like Jackie says, drive to 303 in West Valley too. Tons going on. That's a fascinating drive. There are some huge warehouses up there, and you'd need a car to get around inside of them. I don't know what the warehouses are for, who's going to house them, but there are many. So, well, look, we're going to be back tomorrow night with the gang, with Pat, What's My Rate McMasters, and the dynamic duo of Jackie and Ruby. Until then, take on the day and have a great rest of the week. See ya.